Do you want to become wealthy in 2025? Have you figured out where to invest your money so it can grow wisely and sustainably? If you haven't, then now is the perfect time to learn and take action. In this article, I'm going to share 6 types of assets you should start buying now to build a stable stream of income that not only protects your wealth but also increases its value over time. ETF stocks. In an increasingly volatile economic landscape, finding investment channels that are both safe and yield long-term returns has become a top priority, especially for middle-aged Americans who are thinking seriously about preserving and growing their wealth. One of the smartest, most trusted investment options today is exchange-traded funds. ETFs are investment funds designed to track major market indexes such as the S&P 500, Dow Jones, or NASDAQ. These indexes represent some of the most prominent, well-established companies in the U.S. economy, businesses with massive market capitalizations operating across various sectors. What makes ETFs so powerful is their built-in diversification. A single ETF often includes hundreds or even thousands of different stocks, either within one industry or spread across multiple sectors. This structure helps investors mitigate risk by not relying on the performance of any single stock. Another major advantage of ETFs is their cost efficiency. Compared to traditional mutual funds or investing in individual stocks, ETFs generally come with significantly lower management fees. This means more of your money stays in your portfolio and works for you over time. And because ETFs are traded on major stock exchanges like regular stocks, they're easy to buy and sell throughout the day, providing flexibility and convenience when managing your investments. But the most compelling strength of ETFs lies in their ability to effectively spread out risk. Instead of spending countless hours researching and selecting individual stocks, a task that requires deep knowledge and constant attention, you can simply invest in an ETF and gain exposure to a broad, diversified range of equities. This is especially valuable for those with busy lives who don't have the time to actively follow the markets, but still want their money to grow safely and steadily. In terms of long-term benefits, ETFs offer stable asset growth supported by historical performance data from the major indexes they track. Over the past several decades, the S&P 500 has returned an average annual gain of about 7 to 10%, adjusted for inflation. That's an impressive figure compared to many other investment vehicles. On top of that, many ETFs also pay regular dividends, providing an additional stream of passive income while your capital continues to appreciate. The combination of diversification, low fees, and high liquidity makes ETFs an ideal investment tool, especially for those entering their pre-retirement years who are focused on balancing risk and return. Investing in well-established ETFs, such as those tracking the S&P 500 or essential consumer goods sectors, can help you achieve this balance with confidence. Moreover, ETFs allow you to harness the power of compound interest. By reinvesting your dividends and letting your capital gains accumulate over time, your wealth doesn't just grow, it accelerates. This compounding effect is one of the most reliable paths to building long-term, sustainable wealth, especially in uncertain economic times. With all these advantages, ETFs aren't just suitable for seasoned investors, they're also remarkably beginner-friendly. This makes them particularly well-suited for middle-aged individuals who prioritize capital preservation and steady growth. Choosing ETFs means you can avoid the stress of picking individual stocks or reacting to daily market swings, and instead focus on growing your financial future with confidence and peace of mind. In conclusion, if you're looking for an investment that offers both safety and strong long-term returns in 2025, ETF stocks should be at the top of your list. They help you spread risk, save time, and benefit from passive income and capital appreciation over the years. Investing in ETFs is a smart step toward building a solid financial foundation, one that supports your journey toward financial freedom, peace of mind, and lasting prosperity. Asset 2. Rental real estate. What exactly is rental real estate? These are houses, apartments, or other types of property that you own and lease to tenants in exchange for monthly rent. Instead of allowing your property to sit idle, renting it out transforms that asset into a powerful source of passive income, one that continues to generate cash flow even if you stop working or enter retirement. This is one of rental real estate's greatest advantages, especially if your goal is sustainable financial freedom. One of the most attractive features of rental real estate is the stability of the cash flow it generates. Unlike other investment types, such as stocks, that can swing wildly with market volatility, rental properties typically offer a predictable, consistent stream of income. Tenants pay rent every month, allowing you to forecast your cash flow, plan your expenses, and reinvest with greater confidence. Over time, that rental income can increase too, as you're able to adjust rental rates in line with market demand and economic conditions. Another distinct advantage of real estate is its status as a real physical asset, unlike purely financial instruments. The value of property isn't eroded by inflation, which steadily diminishes the purchasing power of cash and other paper-based assets. In fact, real estate tends to appreciate over time, particularly in areas experiencing infrastructure growth, population increases, or positive economic shifts. By owning a physical asset like a home, you not only preserve your capital, you grow it steadily and safely, even in times of economic uncertainty. Beyond passive income, rental properties help you build long-term wealth. As property values increase over the years, your original investment not only holds its value, it can produce substantial returns when you choose to sell or reinvest. This becomes a strong foundation for legacy planning, enabling you to pass down wealth to your children or enjoy a more comfortable lifestyle in your later years. In today's climate, where many are worried about inflation and market volatility, rental real estate stands out as a safer and more reliable investment option than ever before. It not only shields your wealth from inflation, but also provides a consistent, growing stream of income. For middle-aged investors, this is a crucial strategy, one that protects your assets and ensures your quality of life after retirement without being entirely dependent on fixed income sources. Getting started with rental real estate is also far less complicated than many people think, especially if you focus on areas with strong development potential, stable populations, and high rental demand. Smart investors often target growing cities or suburban regions where home prices are still reasonable, increasing your potential for strong returns and attracting reliable tenants. You can also delegate day-to-day responsibilities to professional property management companies, freeing yourself from the burden of hands-on work while still maintaining consistent cash flow. In 2025, rental real estate remains one of the most profitable, resilient, and secure asset classes available to middle-aged Americans. With the ability to generate stable income, preserve real asset value, and appreciate steadily over time, investing in rental property helps you build passive income and a solid financial foundation for the future. This is a smart move, one that brings you closer to true financial freedom and a worry-free life in the years ahead. U.S. government bonds. In an increasingly diverse and complex investment landscape, finding assets that are both safe and provide steady income remains a top priority, especially for middle-aged individuals pursuing financial freedom and preparing for retirement. Among the most time-tested and highly regarded assets for preserving capital and balancing risk is the U.S. government bond. At their core, they're loans you make to the federal government for a fixed period. In return, the government pays you interest on a regular schedule and then repays the principal once the bond reaches maturity. By purchasing government bonds, you're essentially lending money to the government, with the promise of getting it back along with consistent interest payments. That makes them one of the safest financial instruments available. The most outstanding feature of government bonds is their exceptional safety. Issued and backed by the U.S. government, these bonds carry minimal risk of default, something that often worries investors when dealing with stocks or other higher-risk assets. This inherent stability means government bonds experience far less price volatility compared to the stock market, making them an ideal option for long-term capital preservation. Another key benefit is the predictability of income. Unlike stocks, which can swing wildly based on market news or economic trends, government bonds deliver fixed interest payments on a regular schedule. That consistency allows you to plan ahead with confidence, knowing exactly when and how much income to expect. For those seeking steady cash flow, this is a powerful advantage. For middle-aged investors, holding government bonds can bring essential balance to a portfolio. When your investments are spread across stocks, real estate, and bonds, the risks are diversified. In that mix, government bonds serve as a financial anchor, shielding your capital during periods of market turbulence or economic downturns. That's why many seasoned investors allocate a portion of their portfolio to bonds regardless of how the market is performing. On top of that, government bonds offer reasonable liquidity. They can be bought or sold on the secondary market, giving you the flexibility to adjust your holdings if needed. You're not locked into a long-term commitment without options. Still, to maximize the benefits, it's crucial to select bonds that align with your personal timeline and financial goals. It's important to note that while government bonds typically yield lower returns compared to stocks or real estate, the trade-off is crystal clear: safety and stability. For many middle-aged investors, that's a fair exchange. In an era of low savings account interest rates and unpredictable markets, government bonds remain a safe haven for your money, a reliable source of income that helps safeguard your financial future. Government bonds are an essential component of any well-rounded investment strategy for middle-aged Americans in 2025 and beyond. With high security, fixed and predictable income, and portfolio stabilizing potential, they help you protect your capital, minimize risk, and sustain a reliable cash flow. This is the kind of smart, measured investment that brings you closer to financial independence, giving you the confidence to retire on your terms and live a peaceful, financially secure life. Asset 4. Gold and precious metals. In times of economic uncertainty, rising inflation, and unpredictable financial markets, choosing the right assets to invest in becomes a matter of survival, especially if you want to protect and grow your wealth. Today, let's explore one of the most time-honored safe havens in the investment world: gold and precious metals. More than just a symbol of wealth, gold has served as a proven strategy for preserving value over centuries. Gold is a tangible, physical asset with enduring value. Unlike stocks or currency, which can lose value due to market forces or policy shifts, gold maintains its purchasing power over time. It can't be printed endlessly like cash, nor does it depend on the survival of a single company or financial institution. Gold exists independently of the financial system, making it a critical asset in any well-structured investment portfolio. One of the greatest advantages of gold and other precious metals is their ability to shield wealth from inflation and economic crisis. During periods when the dollar loses value, the price of gold often rises, helping preserve your real purchasing power. This is especially vital for middle-aged individuals, those in the prime of their wealth-building years and preparing for retirement. As cash steadily loses value, holding a portion of your assets in gold can help protect you from the slow erosion of wealth over time. In addition, gold is highly liquid. This means you can buy and sell it with ease in global markets. Unlike real estate, which requires lengthy procedures and paperwork, gold can be sold quickly when you need cash without significant barriers. That flexibility allows you to respond rapidly to financial shifts or seize new investment opportunities when they arise. It's also impossible to ignore gold's role in preserving wealth when the value of cash is under pressure. In an era where central banks continue printing money to stimulate economies, the US dollar's purchasing power can diminish quickly. Keeping all your money in a savings account might feel safe, but in reality, it's a slow leak in your financial future. Gold, on the other hand, tends to appreciate in such environments. It doesn't just protect you from the risk of currency devaluation, it helps you maintain long-term financial stability. Beyond value preservation, gold plays a crucial role in diversifying your investment portfolio. Financial experts unanimously agree, to reduce overall risk, you must spread your investments across different asset classes, and gold deserves a rightful place among them. When the stock market swings wildly, gold often moves in the opposite direction, or at least remains steady. This counterbalance helps cushion your portfolio, reducing the risk of heavy losses if one asset class crashes. Lastly, there's a psychological comfort in owning gold. Many middle-aged investors feel a deep sense of security knowing they hold an asset that has consistently held its value through every kind of global upheaval, from wars and financial collapses to global recessions. Gold offers a sense of stability and trustworthiness that modern financial instruments often lack. In summary, as we move through 2025 and beyond, with markets continuing to face uncertainty, investing in gold and precious metals is not just a safe choice, it's a smart, forward-thinking strategy to protect and grow your wealth. With its tangible nature, long-term value, inflation resistance, high liquidity, and contribution to diversification, gold belongs in the financial plan of every middle-aged investor seeking stability and financial freedom. Remember, investing isn't just about chasing returns, it's about preserving value, and gold is one of the few tools that can help you do that sustainably. Asset 5. Individual retirement accounts. With life expectancy increasing and healthcare and living costs rising relentlessly, proactively building your retirement nest egg is no longer optional. It's essential. An individual retirement account, or IRA, provides a practical and sustainable solution to this challenge. By design, an IRA is a tax-advantaged investment account created specifically for long-term financial planning for your later years. Depending on the type, traditional or Roth IRA, you can either receive immediate tax benefits in the contribution year or enjoy tax-free withdrawals after retirement. This advantage is rare, combining investment growth with tax savings in one package. One of the IRA's greatest strengths is its ability to maximize your after-tax income. Contributions to a traditional IRA can be tax-deductible in the year you make them. Meanwhile, Roth IRAs don't offer upfront deductions, but all earnings and withdrawals after retirement are completely tax-free provided you follow the rules. Beyond tax benefits, retirement accounts allow your investments to grow over time through a diversified selection of assets, such as stocks, bonds, ETFs, or mutual funds. You have full control to adjust your portfolio according to your age, risk tolerance, and personal financial goals. This flexibility empowers you to manage your investment strategy and optimize returns over the long haul. For middle-aged investors, the biggest advantage of an IRA is the power to accumulate a substantial retirement fund. Consistent annual contributions combined with compound interest growth mean your account can expand significantly without having to chase the market every day. This passive yet effective investment approach is especially ideal for those who lack the time or expertise to monitor financial markets daily. Moreover, owning an IRA grants you greater control over your financial future. Rather than relying solely on Social Security, which may fall short of covering your living and medical expenses in retirement, you gain a solid, independent financial foundation. You won't have to worry about working extra years or drastically cutting your lifestyle once you retire. Additionally, the financial security provided by an IRA can ease the burden on your children and grandchildren. While many seniors depend on family support when retirement savings run dry, you, with a clear investment plan, can maintain your financial independence and enjoy a peaceful, dignified retirement. Experience shows that those who start investing in an IRA in their 40s and contribute regularly can build a retirement fund large enough to sustain decades of healthy, fulfilling life after work. Another advantage is that you can open an account and begin with a modest amount, increasing contributions as your means grow. This makes it possible for anyone, regardless of current income, to start building a financial foundation for the future. In 2025 and beyond, amid ongoing shifts in tax policy and Social Security, owning an IRA will become a financial shield for you. Especially if you're middle-aged with 10 to 20 years before retirement, this is the golden moment to begin. The sooner you act, the greater the rewards, because compound interest is not just a financial tool, it's the miracle of time. Remember, wealth isn't just about having plenty of money today. It's about securing a solid foundation for tomorrow. Investing in your individual retirement account is how you turn that vision into reality. Asset 6. Quality growth stocks. Have you ever wondered how to not only keep your money safe, but also see it grow substantially over time? In 2025, a year full of opportunities yet marked by volatility, choosing the right asset to invest in is the key to building lasting wealth. For those in middle age who have a solid financial foundation and want to accelerate long-term growth, quality growth stocks are a choice worth serious consideration. What exactly are quality growth stocks? These are shares of companies with strong potential for significant profit growth in the future. Unlike stable companies that primarily pay dividends, growth companies reinvest their earnings to expand operations, develop products, and capture market share. Familiar names like Amazon, Apple, Microsoft, and Google have exemplified this trend for decades, and they continue to symbolize exceptional growth potential. Typically, quality growth stocks come from industry leaders with strong brand recognition and flexible business models that adapt swiftly to market changes. These companies relentlessly innovate technology, expand their market reach, and create products or services that reshape global consumer behavior. This is why investors expect their stock prices to rise faster than the broader market average. The greatest advantage of investing in this category is the potential for substantial capital appreciation, often surpassing traditional assets like bonds or real estate. When chosen wisely and held at the right time, they can deliver returns double, triple, or even greater over a 5 to 10-year horizon. Importantly, you don't need to be a Wall Street expert to get started. Modern trading platforms are user-friendly for middle-aged investors, allowing flexible capital investment with ease. Moreover, many quality growth stocks today belong to brands Americans use daily, spanning technology, healthcare, and essential consumer goods. This familiarity helps investors better understand the company's business models, providing reassurance when committing capital. Investing in leading industry players also means benefiting from sustainable competitive advantages and market confidence, which helps shield stock values during market corrections. The most critical benefit of investing in quality growth stocks is their ability to rapidly increase personal wealth over a relatively short period. For those in their 40s or 50s seeking a financial breakthrough before retirement, allocating part of your portfolio to growth stocks is a smart strategy. It not only elevates your standard of living, but can also shorten your working years, granting you financial freedom sooner than expected. However, as with any investment, risk accompanies reward. Growth stocks tend to experience higher price volatility than value stocks or traditional assets like bonds. Therefore, they suit investors with a moderate risk tolerance who are prepared to hold investments for the medium to long term. With a sound investment strategy, such as diversified asset allocation, selecting financially strong companies, and regular portfolio reviews, you can manage most risks and reap deserved rewards. Especially in 2025, as the global economy recovers from turbulence, sectors like technology, healthcare, clean energy, and artificial intelligence are thriving. This environment creates fertile ground for growth stocks to surge. Spotting trends early and consistently investing in quality companies will be the game changer for your personal finances over the next 5 to 10 years. A safer approach for middle-aged investors is to avoid betting on individual stocks. Instead, consider investing through ETFs that focus on quality growth stocks. These funds aggregate top growth companies, offering you exposure to upside potential while ensuring diversification to reduce the risk of picking the wrong stock. In summary, quality growth stocks are not only a powerful asset class to accelerate your finances in 2025, but also a vital part of a long-term investment strategy, especially for those preparing for retirement. With high profit potential, recognizable brands, and market leadership, these stocks deserve a spot in every smart investment portfolio. Always remember, successful investing isn't about when you start, but the sound decisions you make and maintain over time. If you seek assets that deliver strong growth and improve your future quality of life, quality growth stocks are among the most valuable choices in 2025 and beyond. In conclusion, investing in these assets will help you build sustainable, smart, and secure wealth in 2025. No matter where you are in your financial journey, owning a diversified, strategic portfolio is the best way to protect your future and your family's well-being. Start your investment journey today. Don't forget to subscribe for more valuable investment insights and the latest financial trends.